Hi there, this is Dean Heskin, President and CEO of Swiss American Trading. You are tuned in to our podcast, The Secret War on Cash, where we take a hard look at some of the changing things or developments that are happening in our financial markets, in our economy. And, to start off this podcast, for those of you who may not be all too familiar with Swiss America, we've been in business now for 42 years. And for 42 years, let me qualify this. I've only been there 32 of the 42. So I don't want to age myself too much, but for the 42 years that we've been in business, our message has stayed uniquely the same. I say uniquely because there's been a lot of changes over the course of 42 years. And what we've advocated and continue to do so is that a person be financially diversified, have a very balanced investment portfolio, because as there's been so many changes throughout the years, there's not typically a one size fits all. There is good seasons and good times for different asset classes, having real estate, having stocks, having bonds, mutual funds, some cases annuities, physical gold and silver, cash positions. That's what a truly balanced portfolio looks like. And so what we're going to look at today, we're going to get into a little bit of some of the things that have been coming out here recently in terms of investment craze. And that's where a lot of the attention and attraction goes. But then also get into some of the ways that you might be able to better diversify. So I have with me, those of you who are tuning in or have tuned in the past or used to it at this point, my co-host, Chris Agelastos. For those of you who are not currently subscribed to this podcast, please do so, as we'd love to have you frequently ask us some questions, give you some information and content that you're looking for. Good morning, Chris. How are you today?
I'm doing well. Thank you.
Good to hear. Good to see you. You look very polished. You got your nice trim beard there, your nice crisp white shirt. Probably one of the best I've seen you in a long time.
I had to take some official photos yesterday, so yes, I'm. Thank you for noticing. I'm definitely dolled up a little bit.
You look fantastic. Well, getting right into it, Chris. As you heard in the open, we talked a little bit about Swiss America. We've been around 42 years now. We've had a consistent message for those 42 years of being diversified, looking at all the different asset classes out there. There are good times and bad times for any market. No market is in a bull market indefinitely. Let's talk, for starters, about the most recent investment craze out there. And I can legitimately say craze because we're talking about something that is being paralleled or likened to the .com bubble. And that is the AI, the artificial intelligence stock, as they call it, frenzy that is taking place right now. There's a lot of corporations out there that have been struggling. There are many reports that are coming out saying that in short order, we may not be looking at nearly the breadth of our U.S. owned or driven corporations out there because of what's going on in the economy, what's going on in their financial situation. And companies are going to be shutting their doors. And we've seen a lot of that already. AI, however, has been an exception to this. AI is going gangbusters. In fact, I believe in this article, it talks about how this sector alone of our financial market, our financial system, represents, I believe, something like $17 trillion worth of basically investor equity.
Yeah.
Is this AI real? Are these numbers, these huge numbers, let's call it, are they justified, or is this something that these experts are right that there's going to be this .com bubble that's associated with it?
Well, as with anything, right, it's hard to predict, 100%. But what they're looking at here is all of the factors that have helped push these AI stocks to insane levels, really. And so you can compare this to the past. That's really the best you can do in most any financial market is evaluate the current situation, compare it to what we know from the past, because that's already in the books, and look for parallels. And they're really pointing out here that this whole AI stock frenzy, if you will, is very similar to the .com and the housing bubbles. Both of those had periods of very loose monetary policy where the Fed was pumping dollars into the economy. In our situation here with AI recently, we had a huge amount of stimulus during the COVID years to try and prop things up, followed by very low, record low interest rates. And all of that sort of led to this over optimism, if you will. And when people are feeling good and optimistic, they get a little bit more reckless, let's say, with their investments, and they take some bigger chances. So there has been a large influx of dollars into the AI markets. It's caused skyrocketing prices. However, I mean, it just came out. I think it was in the last day or two that a large number of NVIDIA, who's one of the leaders in this AI market, a large number of their insiders have been selling off their personal stock. So that always makes me take notice. Now maybe they just want to buy new homes and bigger yachts, but when insiders are cashing out, you want to pay attention. So when you look at all of those things, what they're saying here is that they're expecting significant turbulence, and the comparison they used is essentially that this is a large powder keg that's fully stocked and ready to blow. It's just waiting for a specific event to light the fuse, and we don't know what or when that event may come.
Sure. Well, and you're absolutely right. With the market valuations being as high as they are, for a while now, it's been equated or compared to the dot-com bubble. Mm-hmm. And you're 100% correct. Traditionally speaking, historically speaking, is not a good sign when you have insiders that are selling out their shares. That right. Typically is the handwriting on the wall that something bad may be coming. And what that looks like when bad occurs is going to be interesting, just because AI is a relatively new technology, especially mm-hmm. in terms of where it's gone in, let's just say, the last 3-4 years now. And so, what is this? The powder keg bursting? Does that mean these companies are going to become obsolete? Does it mean what does that scaled back version of these AI type companies look like if and when that keg does blow? And that will be something that we certainly will want to watch, and it'll be interesting to see. Not that we hope that anything bad like that happens.
Right.
However, when you look at the amount of growth it's had and to the extent it has, that typically is not a healthy move in terms of sustaining or maintaining any kind of wealth. Right. So with that said, let's get into, we won't spend a lot of time on this today because we can certainly have anyone contact our office and get information on the metals market. But again, 32 years for me in this business, and goodness, you're 20, I think, maybe a little more.
I'm getting there. I'm getting there, close. I think I'm 15, 16, something like that. Time flies when you're having fun, right?
Exactly right. Well, as you well know, I know you had a background dealing in equities and insurance mm-hmm. and things of that nature as well. So you've had some exposure to all the markets out there.
Yeah.
You first got into this marketplace, and as again the 32 years I've been in this marketplace, mm-hmm. it is always interesting to see how many people have really had no exposure or experience when it comes to buying metals. Yeah. So on your screen, as you see there, it's talking about platinum, gold, or silver coins, generic mm-hmm. numismatic coins, rare coins, precious metals IRA. I think that's probably one of the main things that many people, upon initially contacting us, talk about is they didn't realize how broad this market was, how many different options. And you see all these different things listed, or the things I just mentioned here, Chris. What's the best thing for people to buy? Is there a best thing for people to buy? What should they be looking for?
Yeah, well, I mean, that's one of the advantages people have in working with us, as opposed to just trying to figure things out on their own and heading online or heading over to eBay and picking out some gold or silver, is that they can get some advice based on their situation. And there really isn't one product that is going to be suitable for everyone. And in fact, a lot of our clients may even end up with a little bit of a mix of products. So, I mean, you mentioned, bullion, some numismatics, some collectibles. One thing that is important that covers all of these things is that we're talking about actual physical items. These are coins or even bars that are actually made out of gold and silver. You can hold them in your hand, and that's the biggest thing that I think maybe people don't realize is that you can own physical metal that you have control of, even in your IRA. A lot of people are so used to signing up for their 401k or 403b plans at work and just checking a few boxes for different mutual funds, and they don't even realize that they could have a choice and own something physical and tangible. So that's one of the big things is I would say, get some information to learn about these options. Talk to one of our brokers here to be able to help you figure out what's important to you, what are your concerns, what are you wanting to protect against, and they can help you navigate this and pick the right product that's best for you, or maybe a blend of products that is going to accomplish what you're looking for.
Fantastic. Well, and as you mentioned, and you're right, I've heard it myself. So many people don't realize that with their retirement accounts, they have the ability to, purchase precious metals, which accomplishes two major things, in my opinion. One is you have your money in something that is physical, something that is tangible.
Right.
It is not tied to any one single currency throughout the world. It has universal support of all monies, all financial systems. That's very powerful because as we've talked about in other podcasts, some of the potential problems that we could be encountering here in the United States with BRICS growing, the dollar becoming less in vogue or less significant potentially. And then we haven't even really touched on much in recent podcasts, the debt problem that we have in this country. And that is just out of control. And maybe those people who suggest that, it's a can that will into perpetuity be kicked down the road, maybe they're right. But if they're wrong, at what point does that become a factor in a person's finances? So you have that physicality of it. But on top of that, too, you're talking about with gold prices for 10 plus years now, it's been the number one performing one of the top, in most cases, number one performing asset class year to year. So you get the benefit of that stability, but you also get that benefit of some growth and some appreciation, which, is really the best you could ask for in any investment or any marketplace for that matter. So, all right, Chris, well, thank you so much. And for those of you tuning in, you'll see our phone number on your screen there, or if you're listening to this in your car or what have you, you'll see it in the show description, and you'll also see our website. Feel free and contact our company to get any free information or have any of your questions asked. We'd love to kind of explore the metals market with you and make sure, even if you're not getting into the metals market, make sure you're not getting into it for the right reasons, not because of what you don't know about it. So until next time, Chris, thank you so much. Pleasure having you as always. And for those of you tuning in, have a great rest of your day.
Thank you.